Hello, I hope you're all well. Let's now continue with what is order flow, which is the part of the system, and in the way I explain it, in which everything you've seen so far in the first video starts coming together. We start putting together the structure, everything related to function compliance, which is something I add regarding functions, to make it easier to know when the price is moving in favor of one direction or the other, because there are points where some people get confused and don't know if the price is setting up bullish patterns or setups, and they don't know what to do. So function compliance is for that purpose. It also ties into market profiles. Everything really comes together with order flow. So it's necessary to pay close attention to all of this. And remember that what I want is for you to understand the price for what is on the chart, where that positioning is happening, how that positioning is happening. I don't want you to be so mechanized with simple candles that here is one candle and there is another and just simply see candles on the chart and that's it. I want you to understand what is behind those specific areas and the importance they have. So, order flow is what will give it like the final touch to all that we have seen. So, when we talked about zone selection, we had two very important zones. What were the origins? The price was making moves in one time frame. And the origin was where this reversal happened in that smaller time frame, right? And we had the responsible one who takes out our last swing high, in this case, in the downward trend, and gives us a change of structure. Then, because we were saying that these two zones were so important, because it was where that injection of volume into the market happened, whether manually, by algorithms, or whatever, the point at which volume injection is made in the case of the origin to stop the continuation of these bearish impulses that the price had been making. So it is at that point where the price is telling us that the bearish intention is no longer as strong, that instead of the price coming to this last fractal and continuing, it took it out and is now starting to operate at higher prices. Then there's going to be a pullback, and we're going to have a sort of retest to see if we really want to go bearish, or if it will finally continue this bullish impulse that started. And here in the responsibility we had the volume injection. That last consolidation the price makes, the last volume injection before hitting an important point in the price, a swing high, a swing low, and a good amount of volume is necessary at this point to achieve that, because here there's going to be a bearish origin where there was a structure change in the lower time frame in this pullback and continuation. So what's the price doing? It's testing orders again, the liquidity that's there, and that's where a winner will emerge. And that's what the price is telling us. When it leaves someone responsible, who won? The buyers finally won. Why? Because the price reached. It gave a reaction to that area, to that origin, to whatever it reacted to at this point, trying to follow through on all those bearish orders that had accumulated to give us this movement. It couldn't do it. It just made a small move from a small accumulation and finally broke through. So understand the importance behind those areas so that later we can, in this topic of order flow, clearly understand which one to take, which ones not to, because that is one of the biggest confusions people in this community of DPFX have, which is largely English speaking. One of the most frequent questions is which area to choose. With so many areas, which one to take? Which one is best? This one, out of all these fractals, which one do I take? So with order flow, you'll see that you won't even have to guess what you would do. Taking the same price, the low selection for you while you learn more to read the narrative and everything, so then you can be more aggressive, which is how but more aggressive. I practically never wait for confirmation, but it's because I've been in the system for quite some time and also have prior experience with other systems. So I can afford to be more aggressive, but at the beginning, for those who are learning, I'm going to teach you a way in which the price will show you which area to use. Okay? So, well, what is order flow? I want you to get rid of any definition you have in mind of order flow, especially if it's based on indicators. Those indicators with data and volume that add a bunch of bars here on the chart. If you have an ICT order flow definition, and those who have watched ICT and all that, forget all of it. I want you to understand order flow in this way because it's what works for me. It's what has worked for many people I've taught. So order flow is that way in which we build the higher time frame structure in the lower time frame. It will be both positioning in very specific areas as a step by step. Once we are inside an area, let's assume this area. When the price reaches that area, the price makes a step by step. To complete the pattern we saw then in system functions, what was that pattern? The tab double bottom. So we have a reversal area wherever our flip is, right? This last move before taking out the previous one here, this is our flip area, right? So we take that area, the price returns to the area and gives the first calm trade, the first quick trade, then it comes back and forms the double bottom. So what do we have? Tab double bottom. So order flow is the way the price reaches an area, and from that area starts a whole positioning process to finally give the strong movement that the market expects. Obviously does it in different ways in terms of candles. It won't always be as perfect as it looks here. It has variations sometimes. Sometimes it doesn't even take the first tap. Sometimes it does. And this last touch doesn't. Sometimes it does it this way. But everything is worked from a specific area. And that's what needs to be clear. Well then, order flow is the way in which the price weaves all this structure of greater temporality from a shorter temporality, and it's like adding all that positioning to the market. Then we're going to need again those important areas we were talking about, the one responsible, the origin. There was going to be a third area, any fractal area. This third area is what I'm going to show you here. The price is going to show it to you. There's no need to guess while you're learning, the price will show it to you. Why are these three areas important then? Because of what I explained over here. There are areas from which it's known that there's a reversal in price or a volume injection to break something important. Then there's a sort of transition or transfer of that positioning. So of course, if we're at a bearish point where I was seeing positioning and there was a double top, tapping double top, and everything was bearish from a specific area. So what happens then when the price comes the other way and makes a responsible move and breaks that? It means they're no longer protecting this area. Now that RU order has changed, that specific area has already fulfilled its purpose, whatever it may have been down here, whether it was to reach another higher time frame bullish area, whatever it may be. But once it eliminates one of those areas that was giving you the entire setup that brought you down here, you are left with someone responsible for eliminating that area. So a certain transfer of positioning takes place. I like to see it that way. They stop protecting this, and a bullish positioning begins. So the responsible party is important in that sense, and the origin too, because of what we mentioned earlier, which is where that reversal happens. So the price usually makes small impulses, but there comes a point when it stops doing that and starts to take off. So that's going to be something important as well. And this third area, price is going to give it to us the way it's going to give it to us. So there's no need to guess if an area is going to work or not. It could be any area. It could be this fractal, or I don't know. It could be this entire area. It could be this fractal. It could be anything, even one of these fractals, a hidden ascending one, those hidden ascending ones we talked about in the zone selection video. So the price is going to tell me then that this area is going to be protected, or it's going to help me look for trades from it. Will it do it simply by making the first tap? Then if the price has all this, it comes and does this over here. Then what does it leave you? It leaves you an origin. Well, the price rose here, returned to the area, and from that area, there was a positioning of continuation then. I like to call this as the price validating an area. So this is an area validated by order flow. So when you hear that term in any of my videos, on any channel, on my disk, whatever I have published, and you see that a validated area, I mean that an area where the price returned and it did a flip and then continued, removing the one that brought us to the area, then that area was valid for us. And on the way, the price keeps going and going, and for example, look, here it comes to this area, does a flip, and continued removing this. So for me, those areas remain validated for later, so that if the price returns, let's say it touched 30% here. So if the price returns, what am I going to look for? I'm going to look for the sweep of this first tap, hopefully a tap at 50%, and I can wait for a candle pattern, a flip that makes a small flip in this time frame, and make a much more precise and higher probability entry, so I don't have the need to chase the price, which is going away. It's going away, and it's here pulling back. So here I'm scared, because I don't know if the price will make a bearish move from something here, or what it was gonna do. So I'm not able to take along directly from this area. So before we gain all that experience to know when to do it and when not to, I want you to bring it in this way. Wait until il prezzo. They reach an area, a fractal, whatever it is. And from it, to give them a positioning, but hopefully it is from the 30% or from their first fractals. Why do I want this? Because later we want the sweep to reach our highest probability level, which is the fifth level, 50% regardless of the system you operate. The 50% will always be a level of perfect balance for any system. A lot of 50% systems are used, so it will always be our highest probability level if the price arrives and it mitigates the entire zone. And does this, I don't really like taking an aggressive trade from this zone unless, for example, it has left an unmitigated flip around here and the price has built some liquidity along the way and has arrived, taken that out, and touched the flip. These are small details we want to look into further, but what I want you to look for specifically is this, that the price reaches an area, continues from the area, lows on the way, leaving liquidity on the way, and when the price arrives, clears all that out and touches 50% of that area now, which validated the same price that the same price told them. I am generating a position from that area. The same price is telling them they don't have to guess. They don't have to be there saying no. But in retrospect, everything is very easy. Simply wait for the price to reach an area from a continuation pattern from there, and that's it, because you are going to wait for the price to eventually return. I swept everything that has come here, touched the 50, and from here they can even make an aggressive entry by protecting themselves in the low of the area that validated the price and using the preferred ratio, which we will see more on this topic in the execution video. Or they can wait for the flip if they still have, let's say, fear of whether this is going to continue straight or what, because there will always be a discretionary issue here, and it is knowing when to enter, when not to, when it's better to avoid an area according to what is happening here, according to what isn't happening up here. There will be quite a few variations in that, but mechanically for those who are learning, I want them to focus on this. The price reaches an area, it gets validated, and we wait for the double floor, which is the point where the strong and usually faster movement occurs. When the price reaches an area for the first time. And those who want to be part of the movement make their first move super early. And being the first ones in that movement will be the ones who suffer the most, because the price will consolidate there, the price will go and probably come back and swipe until it makes a double bottom, and then it will go. So there's no need to stress about catching that first movement, that first reaction. Wait for this, the validation by order flow of an area. Remember that this area can be anything. It doesn't have to be necessarily the responsible or the origin. The third area can be any area, a fractal, an area, a swing, a hidden ascendi, a wick, anything. The responsible and the origin, to me, don't need validation as such, because the price has already told us. By itself, there's an interesting and considerable positioning there because of what we talked about at the beginning. These are points where there was a reversal or a break of something important for the case of the origin and the responsible, respectively. Well, let's look, for example, at the last market day we had. To explain a bit how the price does what it does, combining it with the compliance of functions. Well, Then up here already in the afternoon, what happens is the price is in a clearly bullish trend, very bullish, and we have the last high generated up until the moment we started to pull back. So, what do we have here? We closed with a body above it. We closed with a body in higher time frames, and we closed with a body in even higher time frames with the next candle. Over here, we closed with a body below the last bullish candle. We have everything in various time frames. We have everything. A valid pullback by closing below this. And close with a body above that high of the valid pullback to have the continuation. Then this entire area will be our swing area, the complete area. Got it? When I am using a higher time zone, all those little things that are generated then, small fractals, small areas, for me, they will eventually be cleared to return to the higher time zone area and then make a movement of that time zone. The price making small time frame impulses to generate that higher time frame swing, and likewise those small impulses will be cleared in a lower time frame to make the higher time frame retracement. So here we made that retracement. Well, the 50 was already marked, there was a need to put this. So reading order flow, what happens here is that it's a point where I took several entries, and there are quite a few. In fact, at just this point, there can easily be 4 or 5 very high probability entries in a time window from 14 to 23 in less than an hour. So what happens at this point? We've hit the 50% mark. We should be mentally active knowing that it touched a valid point from which we are looking for a trade. So, which is the one with the highest probability? We have the 50% of one of our areas, and additionally, look at this. It's that single opposite candle before breaking this swing. So here a topic of multi-time frame analysis comes into play, and it's to omit all these tiny fractals that the price makes before breaking. What I take is where I see the most volume. And where is the most volume at first glance? Where there is an evident opposite movement and an opposite candle to this upward movement. That's what best indicates it to us. So, I always like to take it this way, where you can see opposite candles and all that. So there's this fractal, and in turn, we can consider it responsible before seeing. Swing broken. Exactly at 50% too, which is an excellent indicator. But then, what was the price doing from here onward? A bearish order flow, because the price is making new lows and isn't able to make new highs. So it is creating a bearish order flow for me from this flip that happened here. From this flip that happened here, this candle pattern is creating a bearish order flow. It pulled back to it and started negotiating lower prices. So I have to wait until I reach my point of interest and touch my trigger, in this case, the 50% for an order change. You will hear in many of my videos that the confirmation I like the most. To start confirming that order flow change in favor of the general market direction I have is the break of an opposing responsible. What does that mean? If I am looking for longs and the price is making a pullback to the area where I am looking for longs, if this is my area from where I am looking for longs, In this last move that I made before reaching this area, that would be around here, before breaking this small swing, a responsible party is indeed the price when it's making a pullback from my area to this previous area. What's going to be the first door that has to open for me to say, this isn't going to generate a counter reaction? The responsible varies. That already, for those who have seen this system a lot, already know how effective the responsibles are in causing reactions. So what I will wait for is for the price to first break that responsible. It's an excellent indicator. And second, that it makes another attempt to go down and fails to do so. Because what will this tell me? That there is no longer enough bearish positioning from here to counteract the amount of bullish volume that is here. Well, read what the price is telling you. See it by positioning. In what way is the price failing to do its things? Where is it starting to fulfill? And that will leave us here at some point, with someone responsible for breaking that responsible one. If we know that a responsible one is important because it broke something that gives us a continuation or a change of structure. So what makes this person responsible for breaking the previous support level? It's the fact that there was significantly more trading volume pushing in this direction compared to the opposite one. This disparity in volume indicates a shift in market sentiment and structure. So we can consider it as a point of high probability to begin operating upwards. You'll hear this often. He is a responsible to a responsible. The responsible who breaks another responsible. Well, you will hear a lot in my videos that then that's the first thing I want to confirm for an exchanger. Ready? The price has been doing this to me and makes me a bullish attempt from here, from the first levels of the area. It makes a first tap. It makes an attempt at a bullish impulse, but fails to give me that bullish continuation. Up to now, it fails to give me that bullish continuation. Look here as a parenthesis. How interesting what the price did. It had left this small fractal and went back to it. And it went, what is this? What we have just seen, the validation of an area, right? And this is going to be a way in which you will also be able to detect false structure changes, false flips with those validated areas. So see how the price reaches its IP to the first step, the same 50%, hence it's already the double top. What's the function of the double top? Take the low, that is the price, starts to fall super hard from that double top and from that area validated by order flow that I want to avoid. From this flip and this responsible one, I want to avoid taking a long. Why? Because the price is coming strong, making the delivery of this double top from an area that the price itself indicated to me that started a downward positioning, that later the price tried to break it. It couldn't achieve it. Sweet. The first tap, and began to distribute the double top. Well, the understanding of order flow will make you know when to avoid taking trades from certain areas, when to have a certain expectation of what the market is going to do, at least up to a certain point, and you will know how to identify false structure changes and all that. Because false structure changes. Because if the price gets here and does this, price leaves this area, returns to it, gives a continuation, therefore validates it for me, and then the price takes out this high of this area. But it doesn't break the area from which this downward movement was generated. I'm still considering the double top tap. So this becomes a false structure change, and it's the most common reason people lose when trying to look for a long from here. It takes them out, and then it turns out the price rejects this low, and now they want to look for a short from here, but it takes them, and then it does break this area, and that's where the bullish order flow starts, because the area that was holding the price down has been broken. After that, pay close attention to this, please. So, going back here, we have that double top, and it meets the criteria of taking out this low. But it takes it out with a body. It closes with a body. What does it usually tell me when it takes it out with a body? That we might expect the price to trade a little lower. In this case, at least. How far? Up to 50% of the area we have without mitigating it. Alright. So, what do we have here? A responsible party. And even though the responsible party doesn't need the validation we talked about, because we already know that behind a responsible party there is already a significant volume, I still validate the price, because we didn't know whether to take a trade from there or not. The price abandoned it, came back to it, and continued. It made a bearish candle to exit this swing, which makes it the responsible party. It goes back inside it and continues to touch the 50, and here is the trade I took. Sweep this. I left the limit at this 50% because this is one of my favorite trades that I share on my Discord, which I've shared with many people. And on top of that, it was a responsible one that even though it didn't need to be validated, the price still did it, meaning there were many confluences and here an unmitigated flip was left. This candle pattern that remained here stayed unmitigated. This fractal remained unmitigated. The price simply went here, took out the high, dropped to 30%, and then went off. So I had considered it unmitigated after this fractal was left. So a double bottom was yet to be made. So for me, it was valid for the price to make another pullback. So I took this short from here, and it does the same. It generates a double top, just like we saw here. But now it's where the price starts, telling us that the order flow is no longer going to be bearish, because pay close attention. So here the price already worked. For us to be certain, it already worked for us. It is responsible. Well then, it already gave a continuation. If the double top is already there, what is the function of the double top? To take out the low of this upward leg. It reaches where the flip is, which still hasn't made the double bottom, and instead of making that break of that low, what does the price start to do? To go and retest this area, and up to this point, I already know that the order flow changed. So, I expect the break of this area from which the price is trying to form the bearish pattern. And here it breaks, stops protecting the price. So this already gives me the indication that the price and those who are positioned are no longer protecting this area, and that the order flow is already bullish again. It has already aligned with the higher time frame from the lower time frame. Well, then what do we have here? What would this last move be then? These last opposite candles, what we just talked about up here, the responsible one to liquidate is irresponsible. What does the price do? Look at how everything starts to work beautifully in favor of the order. Well, the 50. Alright, I didn't enter here in the 50 of the swing area because I was scared. Okay. I'll leave you a flip. I didn't enter the flip because it dropped very fast and went very fast. Alright, there's the double floor. I didn't enter the double floor because the price was making a double top here. Alright, it changes the order flow. I didn't go long on the responsible one because it dropped very fast and I was scared it would continue straight and break it. Alright, what else did it give you? A flip here. Look, it makes a low, it makes a high, it makes a new low. A high here that comes toward another low and removes that. I leave you a flip. In this change of lower time frame structure, it would be this right here. I leave you the flip. The price comes, fails to break this. So that's what commonly gives us a pullback. Because if the price is having difficulty breaking something, it's where it starts to consolidate and make a pullback to find those reasons to continue now. So there it is. How many bullish entries did it give you there? Like 4 or 5. One time it was very aggressive, the other already with confirmation, the other with full confirmation, the other with even more confirmation, and still I took a short here because I was in favor of what the price was telling me. And then it gave an opportunity to rise, flip again from being responsible to taking the responsibility out, and it was the 50% perfectly. And the price starts to move, then it reaches this area where it had generated this pattern, and see how the price starts to cross, having a bit of trouble. The same happens when there are areas of order flow opposite to the order. What the higher time frame is bringing is where these reactions usually happen, and these things usually occur, and the price had reached here. Almost mitigated this 50 of the upper flip. Remember that we talked here that the price came, made a bearish flip, returned to it and continued. See how it clears the first tap, rejects it, and gives a pretty good move. So this is beautiful. This is the order flow. This is how the price reaches your level, your point of interest, and it starts telling you, I am building the higher time frame structure again. I am doing this step by step to start distributing again. And what does the price end up forming? A double bottom pattern that sometimes looks different. Here, for example, this tap couldn't give a continuation upwards, but we could consider it the first tap in a lower time frame because notice that it removed this fractal over here. It removed this too. It just encountered this order flow area here, and that is where it started having issues. But the tap and double bottom remain. There are people who see the order flow as a sequence. It's something unknown to those who don't know. There is a trader very familiar with Dave, and it's Stoic. You can find him as Stoic DA, and came out with a sequence that tells him what chain breakout sequence means. And basically it's the same, only that it's a way to give rules to people. And what the sequence does is this. Now, to finish this video, I'm going to leave you this extra for those who might find this helpful. The fact that they don't understand much, they prefer something more mechanical. So I'll leave it to them. And it's not the price of this, and it would be 1, the breaking of the swing, 2, pullback to the area, retracement to the area, 3, a new high, i.e. continuation. 4 and 5 will be the double bottom in this case. After sweeping number 2, this is the rule that must be followed no matter what. 4 and 5 are generated after sweeping the first tab, and 6 is the target of our trail. So Stoic then came up with this way to show that the order flow, that sequence, to make it easier for people. So the idea is that the trade is taken from here. You know that the first tap is a quick scalp. And where we will have our strong movement is this. But if we learn to read like the price, they go and do things in one direction, and it starts to fulfill its function in the other direction. We will know how to join that movement, because many people, well, even though they have this in plasticine, still don't know at what point to get involved, at what point to get in, either because this area is very large, so they have a lot of topless up there for different reasons. So I prefer that they understand how the price is doing everything, see at what point it starts to fail in the opposite direction, and now it starts to align with our direction, or the idea of direction that we have, and see the number of entries a small space gives. And start reading the price with this. Then it reaches here, the price suite at the day's high rejects. It's Friday, it's about to close a completely bullish week. We assume there's going to be a positioning washout in the stock market. So many don't like to hold positions over the weekend. Hence, these shorts are anticipated. Start studying the price. If you start plotting, then see how the market opens here, where this origin had remained unmitigated. It had mitigated that. 30% has already mitigated, well, almost 30% here in this retracement. Then you suit first tap on a Sunday afternoon. Opening you suit to, you have a great rejection candle. And the price starts to move away from that area that I already validated for you. The price by order flow then reaches here, the entire swing area that we had left here, 50% perfect. Then it starts here, and now it's doing all this from here, from this area. So look how the price also starts to make a range, keeping in mind that it's because it's now facing different things. A rejection from here that already fulfilled, removing its logo, but at the same time the bullish order flow from this origin starts. Read the price, search through all this, see what we got here. We have a responsible person, and it turns out that the person responsible is to remove that responsible person, so look how the price protected it for us here. So it was a good stop loss point. At the point where we would have wanted to take an aggressive entry from that 50% of the whole large area. Because this is the same thing I just explained here. And you see, the more I look for the price, the more I find the same theory everywhere. So that's it. Study the market thoroughly, and then we can move on to the next videos. Well, now don't look here for another responsible. The price abandoned the swing, return to it, left again, then look at the price when it returns. It breaks it. So what can give us an indication that we have a bearish order flow up to that point? And look how the price just comes back here to this fractal. This area is taken out as what is responsible and starts to give us a continuation from when the price had already reached this origin that has a responsible fractal, which will be a responsible in 5 seconds in a lower time frame because it's just a few wicks. So look at how the price reached that flip it made there. Looking at it now, it's been like that. It reached the flip 50% with its responsible, and couldn't open that door, which is the responsible we have there. Couldn't open it like that. Can't open that door yet. We're still bearish. Look how the price ends up pulling out that wolf and nothing. Start reading the price like that. Later on I will also explain in another video how to use other tools like imbalances. In this case, what happened at the taking out of that low was precisely this. We were coming to the 50 of this imbalance. Other things will help you too, but dedicate as much time as possible to understanding order flow through the positioning in specific areas.